What is the single biggest factor for investing success both in stocks and real estate? I'm Bryan Ellis. I'll tell you right now in episode 124.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Hello, SDI Nation. Welcome to the podcast of record for savvy, self-directed investors like you. It's another crazy day on Wall Street yesterday with the Dow Jones Industrial Average dropping another nearly 500 points. What? You didn't hear about that? These rather massive swings have really become the norm, haven't they? I have a question for you. Do you think that's the sign of a healthy market? Seriously, do you? Neither do I. And by extension, it's not a healthy environment for your capital either. So a couple of days ago, I offered a free copy of my upcoming new book to the first 100 of you who asked for it, and wow, did you folks ever respond. All 100 copies were snapped up in the first day, so thank you for that. But here's the reason I bring that up. I was finishing up the last bit of work on that book when it occurred to me that I have the perfect way to explain to you the single biggest factor for investing success in stocks and real estate, and really in any asset class where your success is a function of appreciation. What is that factor? I'll tell you with a story. My wife and daughters, they love to go tubing. That's where you sit in a large inner tube and you float down a river. Yep, that's it. The way it works is you go to a little business that rents tubes where you pay your money and they lend you a tube, then they drive you up the river a couple of miles and drop you off. You get in the water and the river carries you back down to the starting point. It's just a really fun, relaxing way to hang out together. It's perfect for laughing and goofing off and just being together. We've done it a few times and it's something we really enjoy. So recently the four of us went tubing down the Chattahoochee River in North Georgia. Just like normal, we paid our money to the guy at the tubing company and engaged in some friendly banter. Somewhere along the way, he casually mentioned that the water level was a little low, but we'd be okay, and that there were a lot of people out there having fun. And truth be told, we were eager to join them, so we hop on the van that takes us to the entry point, and we jump in our tubes. And within minutes after getting in the water, I get stuck on a small rock outcropping. It's no big deal. I'm a pretty big guy, so it's understandable, and my wife and daughters are still floating merrily down the river, so no problem. Besides, this time they gave me a handy staff to use to push myself off in case I needed to do so. And at this point, I caught a small current, and that helped me move forward just a bit, but most of the time, I kept hearing a scraping noise that I couldn't quite make out. I also noticed a few people here and there that had gotten out of the water and that were sitting in their tubes along the riverbank. Not many, but usually nobody does that. So a moment later, I'm stuck on another rock and then another, and I'm still moving forward because I've got the stick to push off with, but I'm hearing this scraping noise more and more. Then I just stop. I'm not stuck on a rock and there's water around me, but I'm not moving at all anymore. Well, it turns out the river isn't just a little low, it's desperately low. There's literally so little water flowing that my inner tube is stuck against the riverbed. That's what the scratching was. I've been scratching against the bottom of the river the whole time. And while there is water in the river, there's not much, and there's just not enough to push me forward. And you know what? No matter how much I wanted it to be different, the best I could hope for was the occasional forward momentum in specific parts of the river where there was a little bit more water, and even that momentum would necessarily be short-lived. Bottom line, I had to get out of the river. I wanted it to work, but it just didn't. And before I finally got the message and stopped trying to force something that just wasn't going to happen, there was a whole lot of frustration along the way. And a bunch of bumps and bruises too, because I had to get out of the tube several times to actually pull it forward over the shallow water. But I managed to stumble and fall because even though the water was too shallow to carry me forward, it was still deep enough to cover rocks that tripped me up. My friends, I really like to go tubing. But as I discovered, I hate tubing when the water level is low. What's that mean for you? Well, there's one thing that matters more than any other factor when it comes to making money from real estate or stocks, and it's kind of like the water in that river. What is it? It's the market itself. It's the activity of the other people in the world who are interested in the thing you're investing in, and the psychology under which they as a group are operating. The market is really nothing more than the way people are behaving who are making investments similar to yours. So in stocks, if you're buying Google, you're probably also paying attention to what's going on with Facebook and Netflix and Amazon because they're all tech stocks, a clear sector. Because it's very rare for one stock to have a strong run without similar stocks also having a strong run. Same thing in real estate. If you're buying real estate in Atlanta or Boston, the thing that's going to make the most difference to whether that real estate increases in value is how much activity there is from other investors in Atlanta or Boston. But you know what's going on in Dallas or Los Angeles? That really doesn't matter because they're entirely different markets. My friends, mark my words, it's almost impossible to buy real estate that will go up in value if that property is located in a stagnant or declining market. And thankfully, the converse is true too. It's actually pretty hard to lose money on real estate if you're buying into a market that's fundamentally healthy or uptrending. So what's the lesson for you? Don't buy properties, buy markets. And you know what? When those markets run dry, get out. Buy and hold forever is a fool's game. Why? Sometimes markets flow like raging rapids and sometimes they're dry. And there are always hints in advance of what's to come. I'll spend more time on this in future episodes because I suspect there's a real appetite out there for knowing which markets look best and which look poised to fall apart. Want to know more? Then there are two things you must do. First, be sure you're subscribed to this show through iTunes or Stitcher. It's important you do so, and it costs you nothing, so make sure you don't miss this information. And secondly, and even more importantly, make sure you're on the Self-Directed Investor private discussion group. Just text the word SDI group to 33444 to join at no cost. Again, text the word SDI group with no spaces or periods to 33444. So which markets are the best? Which have the right amount of water to push your portfolio profitably down the river and onto predictable profitability? Join me again for the next episode of Self-Directed Investor Radio, my friends, and I'll tell you more. In the meantime, invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at SDIRadio.com. Your feedback is always welcomed via email at feedback@SDIRadio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.